Hi, it's Michael Farr from Farr Miller and Washington. Markets are shrugging off lots of bad news. The news from Israel and Gaza continues to be really bad and upsetting, and it doesn't look like it's stopping anytime soon. This doesn't look like one of those short-term outbursts and flare-ups that's going to go away. I hope I'm wrong about that, but it doesn't look that way. The situation in Ukraine and between Russia, and we say now that we're hearing this week that they have video footage of live firing, Russian soldiers firing into Ukraine. Markets keep going higher. My friend Doug Cass was pointing out in a report this week that a lot of technical indicators, chart patterns, volumes, short interest, a number of data that he looks at suggest that the market's topping now, that it's getting ready to roll over and go down. My problem is, and he could be entirely right, but the market's been waiting for a top for almost the past 2 years. We haven't had a 10% correction for 2 years. The Federal Reserve has said that they're going to end the taper this fall, and I believe them. They say that they're going to begin to raise interest rates in 2015. I'm not so sure. Housing sales numbers have not been good. Employment data have been good, but we're not seeing overall new job growth. Remember, we still have a shrinking workforce, and the workforce and labor participation rate, those who are actually working, who are counted as able bodies and able to work, has been going down. And that's been happening since 2000 as people started turning 65 and retiring, and they're not coming back to the workplace. When you have a smaller group of folks employed, you don't have as much money out there to spend, so we continue to look for that demand-driven recovery. In the meantime, there's a lot of liquidity, people are really worried, and the market continues to go higher. The old saw on Wall Street is markets climb walls of worry. There's still a substantial wall of worry to be climbed, and the market seems to be doing it, not able really to knock much wind out of its sails. So, be careful, be cautious, be consistent, be disciplined, and don't be emotional. Emotion will ruin you every time. You have a discipline to stay invested, make sure you own really good things, solid balance sheets, strong management, strong returns on equity, not too much debt, and a little bit of a dividend never offends. If we can help you sort through all of this noise, we'd be delighted to, and it would be our pleasure. It's what we do for hundreds of clients every day. So give us a call if we can help. For Farr, Miller and Washington, I'm Michael Farr.